In this session we will look at contingent orders, in particular stop losses. When trading, it is important to manage risk, and one of the elements of this is the use of contingent orders, in particular stop losses. We're now going to have a look at how we place a stop loss on an existing position. We can see here that we're holding BHP, and because it is a positive value we know we are long 10. As stated before, we right click on a field in which we want to take an action. So we'll right click on the position and we will go create contingent order. This will then launch a window that says contingent order edit panel. Now the panel is broken up into two broad sections: the contingent order itself, the contingent event itself, and then the order that will be placed as a result. So in this case we're long 10 BHP and our average price is 31.45. So say for example we want to set a stop loss at $31. We select fixed CO, which is the type of contingent order we need to use. Then we select the stock, which because we right clicked has already been populated, and then we use greater than, we use less than or equal to, because if the value goes to $31 or below we would then like to get out. We then specify the price. Remember that everything is in cents. So that is the contingent event. If it is less than or equal to $31 we then want to place an order. Now the order that we want to place, which is represented by the action, is a sell, and we want that for BHP. We want 10 lots because that's how many we're holding, and we can see here that it's defaulted to the current market price. As we did before, we'd like to use a market to limit order. So what that means is once the contingent event is triggered, the $31 equal to or less than, we then have a resulting sell order that's placed in BHP at $10, and that's market to limit. So that's been grayed out because the price type is market to limit. This means it will look for the best buyer when we're trying to sell. We simply hit OK. We then read over to confirm the contingent order is doing what we want it to, and then we hit yes. Now when I hit yes, I want you to have a look at the order pad, the contingent order pad, and see our order go in there. So we can see almost instantaneously that that contingent order goes into the contingent order pad window. You can also see that there's been no order added to the order pad window because this is not actually an order yet, it's merely a contingent event. Once that contingent event is triggered, the order will be placed. That's how you place a simple contingent order. If you did want to edit that at any stage, you simply highlight, come and hit right click, and then you can amend that order. So say for example, we wanted to capture some profit, it went our way, and we wanted to go to 31.50, which is above where the market is trading now, and then we click OK. We'll see what happens when a contingent order gets triggered. So we click yes, and we know that that's actually going to get triggered because we put a price of 31.50. The current market's currently trading at 31.44. We then hit yes, and we'll see what happens. It's triggered, our order went into the market, it's sold. All this happened in less than a fraction of a second, and our position has been removed. That's the basics for contingent orders.